Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket. But if you can make your client's money at the same time, it's advantageous to everyone, correct? No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?
Hi guys, welcome to the Greedy Trader channel. Well, I'm not exactly greedy, as most of you old watchers of the channel will testify. I have the most conservative approach to trading. It's just a nice parody idea from the Gordon Gekko mantra. There are only two kinds of traders, the greedy ones and the fearful ones.
Greed, for lack of a better word, is good. Greed is right. Greed works.
Those of you who are new to the channel, this is where you can learn how to really trade like a professional. Every video I make is packed with real examples with before and after scenarios, so you can see that it is simply a question of sticking with the plan, not changing it because you're having an emotional meltdown. No! Good morning, guys. Depending on where you are in the world. The question we're asking today is why process works, and I'm huge on process. So I'm gonna show you a couple of really important things today that will help you think about process. It's been a crazy week, so it's a good week to talk about process. As traders, often we don't want to talk about process. It's just about seeing a good trade, seeing a good opportunity, sitting in front of those screens every day. It's not really about process for a lot of people. Of course, if you are professional, you're going to have a process because it's something you do every day and you kind of have to do it every day. But if you're not going to have a process. So we're going to talk about that today. So what am I doing? I'm short British Airways. I'm short Boeing, BA. You know, whenever I think BA, I think British Airways. I don't know why. Maybe because I'm British. But Boeing, not British Airways. So I've got the April 17th, 130 puts, Boeing. We'll see how that goes. When you sell premium, you know, you're likely going to come up good anyway. But it's been a rough week, so it's been hard holding positions. I think I spoke about my PayPal puts. Funnily enough, you know, I had a lot of time on them. You know, if you look at where PayPal is now, you know, a couple of my 67s and 65s will still be OTM, but my 70s wouldn't have been. But with all this chaos, you know, as I spoke about in the last video, don't want to go into it again, but with all this chaos, bound to make some decisions a little bit emotionally, just what it is. And I was a little bit overweight on PayPal, so I had to let them go. Such is life. I did, however, sell a hell of a lot of calls on AMD and a couple of others, so equalizing that. So it's okay. However, I've now got Boeing, so I'm short Boeing puts. That's what I'm looking for. So I'm short Boeing puts. So we'll see how it pans out ultimately. But I'm looking to cover these at 70 cents. There you go. That's all that's happening really. Nothing too exciting. I'm long some stuff, of course, portfolio wise. So long AMD. It's a stock I've always been keeping my eye on, and I knew as soon as it was under $100 it's mine. I can genuinely average in if I needed to, if it went any lower, but to be honest, from the look of it, it looks like we're capitulating. So we'll take a look and see if that's the case, and it's all going to be part of talking about process. But that's where I am. So not too exciting. Like everybody else, I did take a bit of a beating If I was a little bit more patient, maybe not as much of a beating as I took, but to be honest, you're better off protecting the capital than trying to hold on to an idea, especially when the market goes in a panic. The tough thing about trading on screens, of course, we're not in the pits or anything like that, so you can't essentially discern whether the panic is legitimate or not. Because of course you can't see the people that are panicking. You know, I can imagine it was such a joy for pit traders because you can just look at the guy across the room that you know is always hitting it and go, oh shit, he's panicking, so I think I should panic. Right? You can also feel the atmosphere, right? Especially from the brokerage firms, naturally. Yeah, they got more risk on. But in this good old world of retail, where you're on screens, well, you can't see the panic, so I can't see the panic. So I got to move accordingly, and that's what I did. But it's not the end of the world. You know, we can still make it work, so it's all good. Anyway, over and done with. Let's talk about process. Why is all this madness going on? First and foremost, with the S&P 500. Now, market profile is where we start, right? I've said this time and time again, it's where you start. I use candlesticks as well, and point in case, if you're a total beginner, it makes sense to start looking at something that might be easy on the eyes. So candlesticks isn't a bad thing. Now, I look at it, it doesn't give you enough data. It's proper, you know, top of book, not even top of book. What am I talking about? It's proper, like, you know, basic open, high, low, close. That's it.
Ever wanted a prop firm that would just fund you and you get to prove your ability? Meet Tradify, the futures prop firm doing just that. Choose from tailored funding programs that align with your trading style, offering account sizes up to $750,000 with the ability to go straight to funded account, skipping evaluations. Experience seamless trading with their integration with top-tier platforms like Tradeovate, providing powerful features and access to the latest technology in the futures market. Enhance your strategy with automated trade journaling, offering in-depth analysis to refine your performance. Follow a transparent path from evaluation to live funded accounts with clear rules to support you at every step. Start trading a fully funded account now with Tradify. Please use the link in the description below. It supports the channel and our sponsors.
I won't go to the extent to say it's useless because that won't be fair. I know a lot of traders will probably pop on, you know, YouTube and say, oh, candlesticks are useless. Don't use this, throw these charts in the bin and all kind of rubbish. Truth of the matter is that they have their uses, and it comes down to process, understanding what kind of analysis process do you need to go through in order to arrive at a decision you want to make. Of course, if you're a longer term trader, you're not making snap decisions, then you have a lot more time to analyze. If you're a shorter term trader, you got to make snap decisions. So you need everything at your fingertips. If you do both, then you still need everything at your fingertips. So there's just no way you are going to get away with maybe just using candlesticks, for example, but they're not totally useless. In fact, point in case, description below, absolutely shameless plug. I really don't care because I think this is going to be useful to you guys and you guys got to know it. I've got a very cheap course on Udemy that I did covering market profile. Not only that, I've got a brand new one on price action. So if you never understand anything about trading, a total beginner, you can start there and build. It's completely free, right? Completely free. It was on Udemy. The link's there in the description, just check it out. And then I've got a following course from that, incredibly dirt cheap. Maybe the price of a McDonald's, I don't know. Right? So you shouldn't really feel like it's a headache. But I promise you, there's incredibly good material in there that will help you if you're new and you're starting out. It will just help you circumnavigate the shit. However, beyond that, you have to build your game. You've got to really understand what you're doing, and that's where market profile and the other stuff comes in. But as a beginner, it's a good place to start because then you can really build. Even if you've been trading for a while, I'm pretty positive there's a lot of stuff in that you don't know, you probably should do. But sadly, whoever mentored you to the start process around this just didn't really take the time, and it's life. happens. So check it out, description below. All right, moving on. Why is all of this madness happening? You know, the one good thing I love about South America is the cockerels. Those guys are amazing. They greet you every morning. It's crazy. The sound of a cockerel. There's nothing like the sound of a cockerel. Anyway, so ignore the cockerel if you're not a cockerel guy. I think my Chinese symbol is year the chicken. I think. Right? Rooster. That's it. I call it chicken. It's not. I think year the rooster. So apparently I'm supposed to be lucky or something. I don't know. Or apparently I'm supposed to be good with money. Probably why I do this. But in any case, I think it's year the rooster. Right? So I'm year the rooster and I love the sound of cockerels in the morning. But I know they can be incredibly annoying, so just ignore. In any case, moving on. So why is all of this madness happening in the S&P 500? Well, first and foremost, it comes down to process. One of the first things I'll do is, let me see if I could get my profile chart up, right? And I'm going to make some edits, right? So we get a picture. So I'm going to throw this on a weekly profile, right? Very handy. Hopefully I did all of this right. And I should get my weekly profile up. There we go. Right, so this is a weekly profile. Now, naturally speaking, you want to get a sense of value perception, historical value perception, current value perception. You want the lot. So I can see historical value with reference, marked it out, green lines, value high, value low, pretty simple. Again, more recent value, value high, value low. It's obviously overlapping. That's helpful because you know that this is going to be the most important value that's referenced. But we've got to take this into consideration because it's overlapping value. And then we've got lower values, of course, low value perception. So that's marked out. And then we've got the gap in value. Definitely expecting this to fill. And it was one of the things I was thinking about before we had this drop is that, Jesus Christ, what if we fill the gap? With the index, gaps can stay open for a long time, especially if the index has made a big move. I mean, we've got gaps going back years. So the bottom line is that you can't always look at these gaps on indices as going to fill. In currencies, they fill more often, and most of the time that asset class is traded quite efficiently. So you don't see gaps at all in most cases. However, on the index, you are going to see gaps from time to time, and I'm pretty sure if I go down value, I'm going to see some more gaps somewhere. Yeah, so there's gap down here. But for me anyway, I'm not thinking that we're going to do 4801 on the S&P 500. That will be something else. That will be worse than COVID. So no, that's not where my head's at. However, I was definitely looking at this gap, 555.9. That was an interesting gap. I was thinking about it, thinking, ooh, what if we fill that gap? So that had to be part of your risk analysis. Talking about process. So I've mapped out my value on the weekly profiles so I know where the longer term money is, at least thinking that things are going to come apart. So these value areas, based on the concept of value trading, if price enters there, there's a high probability, 70% it's going to trade the entire value area. So we already know that. So this gets wired into our process, right? We've got to understand that. So now that I've mapped that out, I can trade directly, of course. I can look at and decide what I want to do from looking at the weekly profiles. But I want to have a more granular look, especially if I'm intraday trading, right? So essentially, I'm trying to take positions in the day. Right? I might not be going back and forth. I just might want a much better price, so I need to have a better look. So now I need to grind that down into a daily profile.
Elevate your trading potential with E8, the best prop firm you've never heard of, where innovation meets opportunity. Access a wide range of markets from Forex to futures and more, all through their comprehensive evaluation programs. Tailor your trading journey with their customizable evaluation programs designed to align with your unique strategies and trading goals. Demonstrate your skills and swiftly transition to managing a funded account, earning up to 100% of the the profits. Trade with confidence on their state-of-the-art platforms like CTrader, equipped with advanced tools and real-time data to improve your trading experience. Enjoy fast and reliable payouts with the ability to request your first payout in just 8 days. Join a thriving community of traders worldwide with 24 hours a day, 5 days a week support and valuable resources all at your fingertips. I am super critical of prop firms, but E8 is definitely the best and has stood the test of time. So sign up now using the link in the description below to get 5% off your first evaluation. Do it now.
There we go. And by the way, the password is linked to my own. So if you do end up pulling the market profile tool from my Discord server, you can't use it without validating it to your MT4. The passwords are completely exclusive, so I'm not really concerned about you seeing my password. Right? So just in case someone's thinking, you should probably cover that up. That's why I'm not doing it. It doesn't matter. Right. So here's where we are. So we can see that a little bit clearer. So taking all of that into perspective, I can see quite clearly that we had a bit of a stack here. It did eventually look like when this happened, we were going to rally. However, that didn't happen. So as you can see, we were holding at value low. And I was saying to myself that if we encroach, right, which we did, we got a rejection initially. I said, if we encroach, then there's a high probability that we'll keep walking that value area, and that takes us all the way down here. So if you remember what we marked out on a weekly profile, that's what's reflecting, and there's a gap in value here as well, right? That 5559, right? And I did think that we're going to fill the gap and bounce. However, what does that mean? It means that we did a complete value trade against the week. Now that was looking very evident from the moment we opened, right? So this would have been the Asia open very early, that midnight 10 o'clock, and then we started to trade and cut back. So you can see that cut in the European Open. That was about 8 a.m. in London, K period. You can see that complete drop. That should have alerted everybody, if you had a process like this, that okay, I'm looking for a value trade opportunity here to the downside, because if we're trading into that value and we're not seeing a rejection, there's a problem, right? And then we started to cut, we had a balance break, and then down we go, cleaning out the value. So the first one to go, obviously, was the 5699, 5624 value against the week, right? These are crazy point moves. So now we clear that value area and you're thinking, well, are we done? Well, we get a bit of a rejection, of course, as we didn't quite take out the gap before end of day. And then we come into early hours. Again, we trade that and then we move back up pre-market. What's the issue with this now? We had a smaller gap, which we filled. The bigger problem we could have is we could trade a little bit lower, retest some more lows, so very kind of crazy open, and then start to rally again. Now that's going to be interesting. If that happens, we're likely to go through value again. That takes us to 5699 at the very least, and then we can start to consider whether we can get to 5739, and that will be value area, the value area high. We might invite a sell-off. There are a couple of naked POCs, and there's an offer, and there's now technically an offer stack. So we shouldn't get excited about the long side until we clear this stack completely. Talking about process. So again, your dominant idea would be reclaiming value, a bit of a sell, because we've already chomped a lot of this, a bit of a sell, and then we're looking to see if we can get long to 5739. Now, that's the reason why I'm short puts on BA. It's the reason why I'm long on some stock, because I think, could be wrong, that we've capitulated by filling the gap, and then we're going to start to rally and we're going to build strength here, and eventually, hopefully, coming to the Fed, the market is discounting whatever the Fed is going to talk about, and that's what we're seeing largely. And of course, people are going to say tariffs and all that stuff. I get it, but the US has a way of walking back its policies, right? So I'm not expecting that Donald Trump's probably going to stick with tariffs. He's probably going to walk it back and say, you know what, yeah, I made a mistake on that one. I'm not perfect, so I'm going to walk it back. I think he's already started to give signs that that's what's going to happen. He's probably going to walk it all back, and there's probably nothing to worry about. I don't think the US is stupid enough to get into a trade war with Canada and Mexico, its largest trading partners. I don't think so, plus Europe at the same time. I think not even America can handle the shit show that's going to occur if they keep sticking to that. But, what do I know, right? Everybody thinks us financial types just talk a lot of shit, but I genuinely, looking at the situation, if you understand the numbers, I don't think that's going to be the case. He's going to have to give it up. So that's where we are. So talking about process, we know what we're doing. Now, the way we come into trades is we translate these ideas into positions that make sense. For me, I could just trade the S&P. Right, I could just go like, okay, well, that's a good level. I'm going to buy it here and I'm going to sell it here. But there are better vehicles to translate this particular trade idea. If I think we're going to cut through value and we're in a bit of a volatile market, well, I'm opting to sell premium. Premiums decay over time, so that makes sense to me. So go back to what we're talking about. As you can see, I was selling about, where were we? About $1.91. Premiums are like $2.37. So position's a little bit against me, but I'm expecting that we're eventually going to drop to 70 cents. This is an April 17th on a 130. No one's really, playing this as much as an idea, but this is a great option contract for me to be in. 37 days to expiry. I'm just on the edge of the expected move, so think of it as a bit of a support level, just about one standard dev. I haven't pushed it just because I want that additional credit, and it's quite expensive already for Boeing. So from my perspective, this is a good trade, right? I've translated that idea that we're going to rally a little bit on the S&P, and that rally should be hopefully strong enough to at least cut us into 118 initially. Maybe we'll get a bit of a bounce from there, and then finally at 70 cents. That's where my head's at. Now, of course, on some stocks, maybe we get a bit of a pop. We've already seen a pop in AMD, for example, after the capitulation. So this is pre-market, as you can see. We're teetering about 98. We can always take a look at what's going on the calls and say, well, look, let's translate this and say, well, looking at Boeing, like just outside the expected move, right? You can see, so if you put this in a 5-minute chart, right? Now I know Boeing's already rallying. It's 148, so we're probably going to see a slight pop in these. Typically, we can see that a lot of the call sellers, there's quite a few contracts being sold up here. We can also see this on the time and sales, but we're not really looking at that right now. We can see that 278 is the kind of pop that we want to keep an eye on. Right, so if I wanted to develop a strangle, right, so I'm obviously short puts and then short calls, a short strangle. So if I wanted to develop a short strangle, one is obviously a far out calendar, so it creates a bit of a diagonal type short strangle. But let me say I wanted to do a short strangle, then that gives me a bit of an advantage because I'm short the near-term calls that we're probably just on the outside of the expected move, that we're probably not going to trade up to 170 before the close of the week, because again, actually, let me move it down. My bad. So I need to bring it to 3-day March 14. I was looking too far out on the wings. And let's bring it in to just outside the expected move on the 3-day to expiry, nearly 60% IV. Right. So you can see a bit of volume here to be fair, but we're going to obviously trade above this, which is telling me that if we keep rallying on Boeing, we're going to get a big pop. Right. So quite a few contracts here. But either way, we're going to look at maybe the 249 resistance level as the potential pop for the day, maybe even lower, right? So we could even be looking at 126 and the whole thing fails. We've got 3 days to expiry. So we mark out a few levels, and then we want to see ultimately how we open. Right, could be interesting by the time the market opens, but this is the extent of the pop max that we're looking at before everything comes apart. So we're on the edge of the expected move. We could pop to 125 and then start to sell off. Right, typically it's a high IV, so we can push this to 230 if the pop is strong enough. And the way that S&P is rallying, it could be a pretty big move. So again, I could translate this into a bit of a hedge trade. So if the market opens, it keeps popping, and my puts are going to be doing pretty well. I can also come in and short the calls with 3 days to expiry. So it's a weekly expiry, so it's done on Friday. As long as we stay reasonably under 157.50 on the underlying, then the calls are going to be good. I've got a lot of time on my puts, right? So I'm translating the idea. So I'm going to collect decent amount of premium, right? If this thing pops to 130, for example, or 125, marked out on the chart, that's $125 per contract. Got 10 of these, that's $1,250. Now, of course, you need a bit of buying power for it to be fair. So, you know, all right, let's say you've got 5 of these, still quite decent. If these go to 0 at the end of the week, it's pretty decent. Again, on the put side, I mean, those premiums, all they need to do is cut by 50%. They're good to cover. So again, it's equal scenario. That's what a strangle is. You can make money both sides. So I don't necessarily need to worry about expressing that. And again, if you want to know more and understand this better, link in the description below. I've got an option course that's got to cost you some money, but not a lot. It's in the link in the descriptions below if you wanted to learn options and get all the basics out of the way. And then if you wanted to delve a lot deeper, then it would be a good idea to just reach out, to be honest, because I don't really have anything prepared for like a very advanced option trading scenario. I just don't. However, I've got everything you need as a beginner to at least get to a decent level where if you're a bit of a DIY person, you can pretty much take it and run with it from there. So I've got course description in the description below, so you can link to it, and if it's your cup of tea, I'm pretty sure you're gonna do fine. All right, so hopefully we get the picture. Right, I've got a ton of stuff on this channel around market profile, so that will be something you can delve into as well. But like I said, if you link to the Udemy courses below, those are like stupidly cheap, no excuses, you know, is what it is. You're gonna learn a lot. Okay, moving on. So here's where we are, right? So again, just to rehash, value trade, back through value, my expectation. So again, on the recovery, that's where we should be. Any more dipping, I think, would lead to an ultimate just people stepping up to buy more. Again, if the D period low goes, then I think we're done, right? The next capitulation level, as you can see, is 5408. That can't be good. That cannot be good, right? For anyone. I mean, I'm short put, so that can't be good for me either. I have to be sitting there thinking, Jesus Christ, unless Boeing decouples from the move, which can happen often, like ConocoPhillips this week was pretty strong despite all the collapsing. Is what it is. So some stocks do fare on better despite. However, it can't be good for the overall market. I would suspect that if that's the case, the Fed will rechange whatever decision it's made. It's going to go back on that and probably show up next week with a rate cut. That's what would likely happen. So I'm thinking there was a bit of pressure, maybe on a political standpoint, for rates to go down, and I think the market is doing a bit of that too, which is, you know what, shock troops time, let's get everything down, wreck the thing, panic the Fed. They're probably going to raise rates, and they're probably going to cut rates, and everyone wins. That could be part of it. But from a statistical standpoint, which is what we care about, this is what we're looking at, is these standard deviations. So that's one process that you need to have in place. Start with your weekly profiles, come to your daily profiles. All right, so your weekly profiles, mark out all your values, come to your daily profile, start looking where the market's cutting against value. Bid offer stacks, not going to talk about those today. I've spoken about them a lot, but that's your process. And when you see the move, you take the trade. You don't have to take it as a cash trade. You don't have to trade the S&P, for example. You can translate that like I've done into a specific kind of trade. It could be short calls, short puts. I generally sell a lot of put premium, but this market's been a bit crazy. So I have been dabbling on near DTE, so essentially near month calendars. I've been looking at those 3 DTEs, 4 DTEs, where I'm literally intraday trading the calls. Different story, right? So I'm not long in calls, I'm not buying calls, I'm not long in puts either. I'm short both sides of the book at the moment of the chain. That's where I am. So there you have it, right? Why process is something we got to really think about. It changes your dynamic as a trader, right? And it's the point of having a bit of a multidiscipline in markets. You know, there's stuff about I'm just Forex trader. I don't think this stuff can work that way, because there are various ways to translate these trades into trades that are gonna, you know, there's risk in some cases. In other cases, they just give you a better opportunity, or they're better assets to play this out in. It's just the reality of it. Why hit your head against a brick wall when there's easier stuff? Anyway, let's leave it here. Till the next video. Adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket. But if you can make your clients money at the same time it's advantageous to everyone, correct? No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?